Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 9th of May. Soft US jobs data scale back Fed hike expectations. On Friday, the US employment report for April showed that the labor market grew at its weakest pace in 7 months, pushing investors' expectations for the next Fed rate hike even further back. Non-farm payrolls rose by 160K from a revised 208K previously, missing expectations of a 203K gain. Average hourly earnings accelerated to 2.5% year over year from 2.3% previously, while the unemployment rate held steady at 5%. Although wage growth moves in the desired direction, the labor force participation rate declined, signaling that people are leaving the labor force. Against the backdrop of soft economic growth and the struggling manufacturing sector, this report reinforces our view that the Fed is likely to hike rates only once this year, perhaps in September or December. Given that we do not expect the Fed to pull the hike trigger at the June meeting, we believe that the dollar's forthcoming direction is likely to remain sensitive to incoming data as investors try to gauge the timing of the next FOMC move. Market pricing currently implies that the central bank is not likely to touch the hike button this year. We view that assessment as too pessimistic at this point, given that the nation's data have shown weakness only during the first quarter, which was marked by financial turmoil worldwide. Taking into account that the chaos has subsided, US economic indicators could very well improve over the coming months. Elsewhere, oil prices opened with a gap higher on Monday as the raging wildfires in Canada grew even further during the weekend, curbing the nation's oil production. Prices could have also received a boost after China's trade data for April showed that crude oil imports rose in April, offering some hope that demand remains elevated in one of the world's largest oil-consuming nations. Given that Canada's supply is likely to remain limited for now, while China's demand remains firm, we believe that oil prices are likely to remain supported in the near term. However, we see some downside risks to this view as Saudi Arabia appointed a new oil minister who is a supporter of the nation's existing oil policy of maintaining production at current levels. As for today, Germany's factory orders for March have already been released and showed a strong rebound from the previous month. In Canada, housing starts for April are coming out and expectations are for a decline. We have two speakers scheduled for today, Chicago Fed President Charles Evans and Minneapolis Fed President Neel Kashkari. As for the rest of the week, on Tuesday, during the Asian morning, we get China's CPI and PPI for April. The CPI is expected to have accelerated, while the PPI is expected to have fallen again, but at a considerably slower pace than previously. This is encouraging news for the global economy as exported deflation through China's falling producer prices is seen as one of the main factors weighing on the inflation prints of many developed economies. On Wednesday, we get UK's industrial production for March and expectations are for a rebound in the figure. On Thursday, two major central banks meet to decide on monetary policy, the Bank of England and the Norges Bank. The Bank of England will hold its last Super Thursday before the EU membership referendum, where the monetary policy decision, the meeting minutes, and the quarterly inflation report will be released simultaneously. Governor Carney will also present the inflation report at a press conference following the rate decision. Officials are widely expected to remain on hold at this gathering by a unanimous 9-0 vote. Therefore, the focus is likely to shift on the updated economic projections of the inflation report and any Brexit comments by Governor Carney at the press conference. The Norges Bank will also gather to decide on interest rates. In the absence of any forecast, we expect the bank to stand pat at this meeting and to monitor the effects of its previous rate cut. Oil prices have risen since the latest meeting, implying higher prospects for investment and growth in the Norwegian economy, as the oil and gas sector constitutes of approximately 25% of GDP and more than 50% of exports. Finally, on Friday, the US will release its retail sales for April, and expectations are for a strong rebound from the previous month. From Eurozone, we get the preliminary GDP data for the first quarter. The forecast is for the preliminary figure to confirm the flash preliminary estimate and show that Eurozone's GDP accelerated to 0.6% quarter-over-quarter from 0.3% quarter-over-quarter in the fourth quarter. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.